Welcome back. Now, challenging trading conditions exacerbated by the weak macroeconomic environment has weighed on KAP. Despite this, the diversified industrial group managed a 2% uptick in revenue, but under pressure, headline earnings per share plunged by 47%. No dividend has been declared for the period. Company CEO Gary Chaplin joins us with greater perspective on the year that was. Gary, thanks so much for your time this afternoon. So we are seeing a bit of a disconnect when it comes to the top and bottom line, similar to what played out in the first half. The same issues at play here, a tough trading a tough trading environment and non-recurring costs also weighing. Now, the last time I spoke to you, you said you were pleased with those numbers. Do you still share the same sentiments in terms of the operational performance of the group?
Good afternoon, Toleng. Good afternoon. Thanks for having me on the show. Listen, it's a tough set of results in a tough environment, but I think a lot of positives coming out in terms of us concluding our major projects and ramping all of those up to full capacity. And unfortunately, that was the largest impact on our results. So when you start projects of this scale, it does have an impact on your revenue line, your operating profit line, your interest line, and your tax line.
Mm-hmm.
And I guess that is the primary reason for the disconnect between the revenue and the headline earnings, as you alluded to in your introduction. So tough environment, tough trading conditions, which weighed on our earnings to an extent in terms of volume pressure, price pressure, obviously more competitive. But at the same time, pleased with getting our projects up to full capacity, remaining within our covenants in a tough trading environment, together with the impact of those project startups, refinancing all of our debt. So, yeah, good foundation to end the year on, looking into the next year.
Yeah. So would you say that the worst is behind us when it comes to, the hit to the bottom line, and that the business is now poised for growth?
Listen, I think in terms of our internal factors, the answer to that is yes. So the internal work, the hard work is done and the worst is behind us. Obviously, the external environment, one can never say what direction it's going to go, but all things being equal, yes.
All right, let's zoom into some of the businesses. There's been an ongoing turnaround at the logistics and supply chain unit, Unitrans, but the group hasn't started reaping the rewards as yet. Is this as a result of, that tough trading environment as well?
Yeah, listen, Unitrans, we've done a lot of good work. Some of it has started coming through, but unfortunately slower than we would have liked, and not yet sufficient. They actually had 3 good quarters and then a particularly weak fourth quarter, which was largely as a result of the agricultural season starting later. So a little bit out of our control, but weighing on the results for the year. But forward looking, the work that we've done there, we're comfortable with, and we're still confident will lead to a materially improved performance from that business.
Let's take a look at Faltex. Also, under pressure when it comes to profits, dealing with lower vehicle assembly volumes. Interestingly, that was those downbeat volumes were really felt in the first half. Are you confident about a rebound now moving forward? And are you just confident about that vehicle market? Yes, we are seeing, vehicle sales improving here on a local front, but we do know that there's also risks when it comes to the export market with those US tariffs in place. So just from a customer perspective, when it comes to Faltex, what sort of risks are at play for that unit?
There's a lot of turbulence in that sector. A change from internal combustion engines to electric vehicles, the whole tariff war that's going on, a flood of imports from India and China, a local manufacturing incentive program, which has its challenges. So a lot of turbulence in the sector, not yet affecting us in terms of our daily operations. However, bringing some uncertainty into the outlook going forward a couple of years, because I think it's going to take a couple of years for that to settle. But I'm pleased with that division's performance at a very good H2, which was almost a return to normality. So H1 was difficult with a new model changeover, together with one of our customers having some of their own internal issues, which affected our volumes. Those are now behind us. We had a good H2, and forward looking into F26 looks like a return to normality for us.
All right, and as we look ahead to FY26, just walk me through how comfortable you are with your debt levels at this point. Just reading through some of the commentary from the results, the group mentioning that reducing debt will be a focus in FY26 and FY27.
Yeah, I mean, it was a focus for this year as well. Unfortunately, trading conditions were a little bit more challenging than we expected. Despite that, we still generated close to 500 million in free cash, which went towards debt reduction. That remains a key focus for us going into F26 and 27. So we are very focused on our working capital, focused on our capex, really to target debt reduction. We're not concerned around the longer term picture.
Okay.
The projects that we've done are sound. We've been through the worst in terms of commissioning them and getting them up to capacity. And now we look to extract value from them and pay down our debt levels.
All right, before I let you go then, Gary, perhaps some parting words, considering that you'll be stepping down from that top boss position come the end of September. I mean, you've been at KAP for about close to 30 years, right?
Yes, that's right. Yeah. I mean, it's sad to be leaving, but I think the timing is appropriate. I've been in the seat for 10 years. I think that's long enough. I think I've done what I can do. And I think the business is well positioned. We've been through the difficult stage of building major projects, commissioning them, getting them up to capacity. And I think it's now time to step aside and bring in some fresh energy to really drive the strategy to conclusion. And I think the newly appointed CEO is the right person for the job. Yeah, and I wish him all the best, and I'll certainly be watching to see the successes of the future.
All right, Gary, let's leave it there. Wishing you all the best with your future endeavors. Now, that was Gary Chaplin, CEO of KAP.